presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. We're kicking into May. Oh, baby. Don't make assumptions. Learn to ask questions. It's always better to ask questions than to make an assumption. Have the courage to ask questions and to be as clear as you can be. Once you hear the answer to that question, you won't have to make the assumption anymore, because you'll know the truth. Only the truth has the power to set you free. Market-wise, let's take a look at it out here. We have the Dow Industrials down 429, NASDAQ off 193, S&P's down 51. Gold contract trading down $54.60 at 23.0310. You got silver down $1 to $26.63 an ounce. Light sweet crude down $1, $81.74 a barrel. Copper off 11.5 pennies at $4.56 a pound. Notes and bonds. 10-year note down 16 ticks, trading 107.14. The 30-year down 24 at 113.27. And King dollar's trading up 630 ticks, 106.210. Euro 106, yen 157, British pound 125 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Let's go look at the SPY first, because I want to see where we are with the volume and where we're coming into and how we're coming into these bars. So if we take a look at the SPY's done 45 million shares out here. Yeah, not even close. So the high of the low of Thursday was 504.27. Now we haven't hit that yet, which is pretty amazing, actually. So we've hit 504.40 cents rather, 504.40 cents. And, you know, we're going to have a contraction of volume out here today. Now, yesterday we had light volume on the way up. Today, bottom line, you'll have more volume than yesterday, but it's still going to be light volume, because we're going into 69 million shares, and there's no way we're going to do 69 million. We got 45 million right now. We get to the Qs. What do we have with the Qs? And we get the Fed meeting. Well, they're meeting today. Statement tomorrow at 2 o'clock. News conference at 2:30. We go into the Qs. The Qs get 24 million right now, and that is a big contraction of volume, you know, because we're coming into 57 million. So that's not even close. We hit 427.12. Now the highs of the lows is 425.32. Amazon, let's go to Amazon. So Amazon's going to be the big dog coming out after the close out here today. The low for the year is 101. The high is 189. They are going to be looking to take in $142 billion to the top line, 82 cents to the bottom line. And if we take a look at the setup, okay, so let's see what we got here. Put this on a weekly first. Then I'm going to put it on a monthly. So I put Amazon on a weekly. Oh, yeah. This is trying to bust out. Interesting, man. Okay, cool. Now let's do the monthly. Yeah, this is heavy, man. This is trying to bust out. Okay, so now let me see what we got here. We get a small expansion. What was that? 1.6 million shares. We're only at 800,000. That's not good. Yeah. So what you have here, folks, if you're watching Tiger TV, the last two highs that were out there, the 188.65 plus the 188.10, that brings us back to November of 2021 and July of 2021. The volume is much heavier, man. So that's saying that might have a tough time busting out. That's it's coming down to, because, we only get 5. You get 800. It's half the amount of volume. So that's going to get intriguing coming into the close, man. Not coming into the close, after the close. Notes and bonds. Let's go take a look at the note and bond market out here. So note and bond market, we're basically at lows. Well, and we're not at lows, actually. We hit, we're 107.14. You got 1.8 million contracts. Now, we're going into 2.5 million. So we don't have a rejection of lower price yet, but that low that was established out here last Thursday, 2.5 million. So you just don't have the sellers just yet. Now, the bottom line is that you certainly don't have buyers either. But right now, let's just say this thing still wants to turn around. And if it's going to turn around, when are we going to have it? We're going to have it tomorrow in a monster way. If we do go look at, this gets interesting here, because if you look at the TLT, that's the 20-year plus. The TLT is basically holding. That bottomed out last Thursday also. You needed more volume yesterday. You got decent volume, but, yesterday we were up on 29 million, you're down on 18 today. So this looks to me that we are making a bottom here. Now, let's go to the culprit. The culprit is the good old U.S. dollar. This thing is looking to go to 107, which is a problem for the S&Ps as well as gold. So we take a look at it. Yeah, it's on. The last high was established 106.517, and then if you go on the other side of the chart, meaning 6 months ago, 107.111 is the number out here, and it looks to me like that's what we're going to get. The real question is that does it hang tough up there? What does it do when it gets up there? If you want to see a large move and the cocoa business, folks, okay, this is pretty amazing. Let's check this out. Cocoa was trading 11,000 about a week ago, and went down to 7,700 today. Yeah, we got to 11,722, went sideways for 4 days, and then just got taken to the cleaners. So we know how this goes. You take the escalator up and the elevator down, right? It's pretty amazing that you can have the same product that traded literally 10 days ago at 11,700, trade today at 7,700, and right now we're at 9,200. Pretty wild. Stay right there, folks. Come right back with our man, Mr. Basil Chapman. We have the Dow Industrials right now, trading down 420, NASDAQ off 191, S&P is off 51. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading down 446. You got the Nasdaq off 204. S&P's down 55. And you talk about some pot stocks, folks. So check this out. So the DEA did come in today and say that, hey, listen, they're going to reclassify pot. It's going to go from a Schedule 1 to a Schedule 3. And look at Canopy. Canopy growth. I mean, this stocks are smoke, no doubt, but it's up $5.85. All these equities basically are up, and they're, because that is going to be a change of tune in a monster way. That's the floodgates just may open up here, folks. And in the context of the next thing would be the banking structure for these pot companies. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday. And don't forget, folks, Basil has an outstanding show here every trading day. Also has a great newsletter, The Opening Call. Now, it's very easy to get The Opening Call, folks. Come over to our website at TFNN. You're going to go right into newsletters. You're going to see it on the left-hand side. You can get The Opening Call for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199, or 22%. You get it for 1 full year for $1195, which is a savings of $593, or 33%. Now, they all come with a 30-day money-back guarantee. Basil has a huge amount of archives on the page. So the way it works, you come over, you check it out, you get it, you have a 30-day money-back guarantee. You're going to understand how to ride that wave each and every day. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very good. Thank you. So we're looking at this Dow down 452 points. And for a little while now, I've been talking to you about this particular indicator, this indicator of last resort, I call it. The move. This is the 9 and 14 period moving averages.
Yeah.
And what I had said is that from November the 3rd, the Dow, once it crossed positive, this green line stayed positive all the way to the 4th of April. Then it went pink, and we're looking at this pink 9-period moving average still underneath the 14. And one of the things I use this for is to say, what is the trend? This is the daily chart, which is very different to the weekly chart, but it's a daily chart. And it says to me that at this particular point, the consolidation that we've been talking about in the Dow is still undergoing. But look at this. Here's the S&P. The S&P was green from November, right there, there's a daily chart, November the 6th, stayed green right up until the 12th of April. So it started its rally a couple of days later than the Dow, and it ended it a little later. But here it is, pink, and it's just reversed down sharply. So until that goes green, the I call it the tide. The tide hasn't really changed from this turn down. If you look at the QQQ, that's the index 100. It's the same thing, pink, and this one is a little bit more bumpier road because there were a couple of days in January where it went pink, went right back to green within 2 days, and it stayed that way, and then started this choppy pink, green, pink. Green is positive, pink is negative, and now it's been pink. I probably should say red, but I like pink because you have the bars that are red. So I like the difference in color. And the IWM, which is the Russell 2000, this is going to be the big thing. Russell 2000 is down 3.5 right now, but it had a chance, just a momentary chance to move higher. And one of the things that I've been looking at is the Magnificent Seven, one by one, they just started to fail. And even though we've got Microsoft, you can see Microsoft here. We've got Microsoft down to the 338 level. It's screamed all the way to the 420s. But here it is at 393. And you can see that pink 9-period moving average is expanding. So I'm looking at how does this market unfold over the next couple of weeks in which we could see the weak stocks. You know, money always likes to find the best home. So I wouldn't be surprised if money does come out of these really big caps, at least for a kind of a consolidation period of maybe 3 to 5 weeks, and that money will find another place. So we're looking to see exactly where it is. Now, it's interesting that on the weekly charts, I'll just jump over to the weekly charts, and you'll see, there it is. Look, the Dow, that green 9-period moving average in the weekly chart hasn't yet turned down, but it's really close. So that's the Dow, but the monthly chart has made a peak C in the Chapman wave of buy mode. Invariably goes to 4 higher peaks, so I'm still looking at higher highs to come in 2024 because there's only a peak C, and we'll still need a leg D, which will be above 39,889. Here's the same thing with the S&P, but I'm going to go to the S&P futures because I think that's a little bit clearer. The S&P has got a peak C, but the futures have got a D. And I like to have synchronicity, but you can see that 9-period moving average hasn't yet, it's not even close to turning down. To get the 9-period moving average in the weekly chart to go negative, you'd probably have to be down the 4,090 area. Sorry, 4,090, and here we are at 5,087. So far, that's still a positive weekly chart, but we have got a leg D in the monthly chart. And this is very interesting because we've got a leg D in the monthly chart, but a peak D in the cash. So there are a lot of divergences, and I think this market is just waiting for some kind of a resolution to how it unfolds, taking money away from what has been working beautifully up until like those big caps, Microsofts, Amazons, etc. And what happens to the money as we start to digest these gains. And you know, it's so fascinating. You just mentioned MSOS. This is the cannabis sector. So we had this as a long position, advisor shares, pure U.S. cannabis. And the only reason why we had it was, I believe it was Kamala Harris had mentioned something that was very favorable, but there was no follow-up. And then I've been getting calls and subscribers that said, well, what are we going to do? And what I said is, if you're a longer-term player, there's no question in my mind that at some point, this and MJ is the other one. This is advisor shares, and alternate harvest is broader. It has the Canadian stocks as well. The other one is just U.S. cannabis stocks. I said, if you have patience, this is going to work, but you need to have something that is not just a nuance. You've got to have some structure, either banking or in this case, there's the DA. There's got to be some effort that really changes the modus operation, the way you can look at these things. Now I think it's freed up these stocks to start to move a little bit higher. So as I'm talking, I've been in my show, and I'll do this again tomorrow in my show at 10 o'clock, I've been talking about the Bitcoin, how it made a top, but there was a really good chance that it would pull back, and if it took out the 60,000 key support, I think it can go down a little bit further. So here it is at 60,270. So it's just interesting to see how money is going to flow over the next couple of days. We'll see what the Fed says, because the TLT, the bonds, there's this inside track repellent zone in the weekly chart of the TLT, and so far is holding in this. So we need to see the bond yields start to come down so that there's a little bit of a relief there. This is a really interesting market right now, but we've raised cash. I think we're going to have a lot of positions that we could put on this pullback, and I think it's a good time to be looking at stocks that you missed on the way up. You can wait for them to come down and just make a list, because I think we'll get a buying opportunity, and I am looking at higher highs maybe in the summer.
Make a list and check it twice.
Absolutely. And all those round numbers, you saw what happened to those stocks that fell so
I meant to tell you that, well, you see gold, the round number today, low 2300.00.
That's amazing, huh?
It is.
Yeah.
Have a great one, folks. Have a safe one. Stay right there. Come right back.
Tend to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow Industrials right now trading down 450. You got the Nasdaq off 200. S&Ps are off 55. You get some good numbers. Volume, let's go take a look at this volume, see where we're standing here. So, in the NYSE right now, Yeah, it's going to be short volume. Well, you get 479 million, so it'll do like 900, and a composite. You're just hitting 4 billion. We'll do 5 billion. It'll probably put $1 billion in there. But bottom line is that, and if you look at the SPYs or the Qs, the volume's not high on this pullback, man. That's the bottom line. Let's get over to our man, Mr. Tim Ward, as we do every Tuesday and Thursday, folks. And don't forget, you can get hold of Tim every trading day at ORD, ORD-Oracle, ORCLE.com. That's ORD-Oracle.com. Tim Ward, what's going on, brother?
Well, actually, let's take a look at volume. Let's do a little lesson here.
Cool.
Can we go to chart 2?
Yep, absolutely. There we go. Okay.
All right. Chart 2 is the SPY, and I use both, but it seems like SPY, you can use SPX, you can use SPY. But I found out SPY volume, the ETF or the SPX is better than the SPX. But anyhow, last Friday, we got a kind of a blue dotted line there, and that's last Friday. We gapped up.
Yeah.
And if you compare that volume to the previous high, which is a week ago Wednesday.
Yes.
Okay, we gapped above that previous high and higher volume. So that's a legitimate breakout, and you left the gap there. So now you broke a previous high and higher volume. You gapped up above that previous high, which is last Wednesday, Friday. So now we're testing Friday's gap.
Right.
Right?
Yep.
Okay. So long as you test, so you broke above the previous high and higher volume, now you're going to go down and test the gap. As long as the gap is 10% lighter volume than when the gap occurred, the day of the gap, then this should be a support area.
Right. Cool. Yep.
So anyhow, so we gapped above a previous high and higher volume. Now we're coming back down to the gap, most likely, or because day's not over, but we got a half hour to go, and volume is going to be lighter. It has to be 10% lighter. So we're probably going to find support here, day, month in, and all this other stuff. So anyhow, that's how I'm viewing the market on volume. That's actually going to be my report tonight.
Nice. No, I can see it because we
chart 1.
Yeah, because we're going into 69. We're going into 69 million, and you only get 50 right now. So, most times you're not going to do 19 million in 45 minutes, 30 minutes.
No.
Yeah, that's for sure. So, chart 1, Tim.
Right. Yeah, chart 1.
Okay,
this
cool.
is one I'd hope to kick in, which is a Zwag breast thrust indicator.
Yes.
On April 18th, we had it turned up from below 40. And needs to get to 0.60 by 10 days. 10 days is tomorrow.
Oh, bummer.
And,
okay.
Yeah. So we're not going to do it.
Right.
When I did this, sent this to you with a report, anyhow, it was 0.48.
Okay.
And the day before was 0.55. So really, today had to be an up day to really have this kick in. And tomorrow is just a great big day, but we're not going to get the Zwag breast thrust indicator, which is, doesn't have to happen. But if you do get it happen, you get a lot more confidence going forward.
Until next time, Marty Zwag, that's all we can do, right? Wow.
So, but you like to see them come off of lows, and this wasn't like a big decline. I think this is kind of a timeout and an uptrend. I think the bottom's in for the right now. And the volume studies are actually coming in okay. So let's see what chart 3 is.
And tomorrow, Tim, is going to be a big day because what you have tomorrow, like the Fed start meeting today, they're going to come out at 2 o'clock tomorrow afternoon with their statement, and then 2:30 with the news conference. So that's, of course, going to be all about interest rate structure, folks. But the bottom line is that that's what rules the market. That's for sure. So
yeah, that's true. So it's probably they're anticipating whatever it is, but it's on light volume, so it's probably going to be support. But,
I agree. No, listen, these days always get intriguing, man, because we always anticipate they're going to be huge, and that's not real either. Do you know what I mean? But it seems that when they like to kill the market right before the Fed, then all of a sudden, boom, they come in dovish. We'll see whether he comes in dovish. We'll see how that shakes out. But, so I have chart 3 up here. Okay.
All right. Chart 3, kind of just, I wanted to point out kind of a selling climax going forward. And, it seems like this is not, anyhow, selling climax is when the volume jumps at least 30% compared to the previous day's trading, or not necessarily you look at last week's volume, you can compare it to what's currently going on. If you have a surge in volume, either up or down, at least 30% or higher, percentage-wise, then usually that stops the market, either going up or going down. And we had I pointed out a bunch of selling climaxes where the volume jumped at least 30% compared to the previous days. And if you notice, if you draw all those lines where those happened, pretty much you're setting at a low. And last time we had a big jump in volume came on April 19th. It's not quite, looks like about 25%, but rules are not like set in stone.
Right.
But you did have a surge in volume on April 19th, and that marked a low.
Yes.
Several years ago when you got a selling climax, you always counted on that selling climax to be tested.
Yes.
Now, it doesn't, some do, some, a lot of them don't.
Okay.
So yeah, but the 30% rule where volume jumps all of a sudden, it does stop the market. And so, but on April 19th, to me, I'm calling that the bottom.
Right.
And I don't think we're going to test it. So we're kind of just working up. Today we're testing a gap. I got that blue area is a gap.
Right.
We got a gap above us too, up around 415, 420 there, or excuse me, 515, 520. If we test that on lighter volume the first time, it's going to stall it. If it tests it on equal or higher volume, we'll go through it. I think in general we're probably going to go through it because I think the trend's still up. The trend today, I was watching Think or Swim. 1.28 on the trend right now, which is decent.
Yeah,
so
we got a little
really
fear going. Right, there's no doubt. It's not like, what happened last week, folks, we were going down and the trend was going down. So it was like, okay, hold it. That's not going to fly.
Yeah.
Yeah, right.
No.
Right.
Yeah, so that wasn't a good sign. Now we got going down, we got the trend. So they're probably, they're doing whatever they need to do to get everybody on the wrong side for whatever announcement is tomorrow. So
that's a fact. Stay right there, folks. Tim and I are going to get you on the right side of this market. Dow Industrials right now down 460, NASDAQ off 197, S&P's off 56. Tim and I come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow's up 441, Nasdaq's up 197, S&Ps are up 53. We're talking with our man, Mr. Tim Wood. We are talking markets out here. And the chart I have up, Tim, I have the third one up there, has the selling climaxes on it.
Yeah, let's go to chart 4.
Okay.
Chart 4 is actually, we look at the top window.
I see it, RSI,
yep. The window is the summation index. We talked about that last year, when summation index hits below minus 700, which it did on October 27th, and it has to rally 2 months and hit above 1,000. It did on December 27th. So that was a bullish intermediate term sign. That opens the door for like a year rally or better.
Yes.
So it happened. So that suggests we could rally possibly into October year end. On a nearer note, I put the RSI 14 in there, and this is a weekly chart. And I say the weekly RSI between 80 to 85 is never the final high. Most of the time, you have a minor pullback before heading higher.
Okay.
Well, right going into the March high, we had right smack at 85, I think it was. We backed off this month, April, and if you believe those, if you have to do the study and you go back to 1980 or something like that, when you get that much momentum, when the RSI hits 80 to 85, like I said, if you go back to like 1980 or whatever you want to go back to, it's really never the final high because momentum is just too high. So the next higher high, either you blow off similar to what it did back in 2019, the RSI got up around 90 there, or 95, I don't know what it was, but way up there. That's kind of a blow-off high. Or you go up to, it doesn't break 70 on the next time up.
I see.
So this time I think we're probably at a mid-term low April 19th. The rally's actually started, and we're the next rally up. So either we go into a blow-off high, RSI hits 90 or better, or we don't even make it back to 70.
I see.
And that could set up. So this is months down the road because we got to have the market turn back up here, which is currently doing, but we haven't seen a new high yet. And so the momentum of the market is really strong right now, even though we pulled back this month.
Right, and if you've been following us, folks, okay, Tim got this, not only straight. If you remember, it just reminded me, Tim, when we were going through this on a monthly basis, because I remember we're at the end of April right now, and if you remember, at the end of March, the way this market was at the top, you specifically were saying that normally when we have the technical indicators that we had at the end of March would be April would be a down month, and bottom line is that there's no doubt this is the first down month that we've had in a long time. So really cool call, man. There's no doubt. Right.
Yeah. First down month we had 5 months up in a row, and April was a down month. And also, I don't have that. Yeah, we don't have it shown, but I also did when the trading range, or like the candlestick part on a monthly time frame, 50% closes above the mid Bollinger Band on the monthly, or the upper Bollinger Band on a monthly time frame. I've showed that several different times. You get 50% more than above that, you got too much momentum too quick. and that predicts, which we did in March. We had 50% of the trading range above
I'm so glad you brought that up.
Or upper Bollinger Band.
Right, because I forgot what the signal was, but I knew that it was there. Right, cool, man. That was the signal. That's right. Okay.
Yeah.
Cool.
That was the signal. So that predicts next month will be a trading range month or down month or something.
Right.
And that worked out. It's kind of a low tech indicator, but it's, over time it works. So
I'll take it. A low tech indicator. Yeah. Give me simple every single time. Every single time,
right.
Man. Yeah.
Let's go to 5.
Okay.
This is one we got to, we're kind of waiting here. And I updated this just today. So the bottom window, we've been looking at this indicator for, I don't know, last few weeks or whatever. Anyhow, the bottom window is a monthly XAU gold ratio. And this graph goes back to 1984. Well, it hit a peak in 1996, 28 years ago, and I drew that trend line all the way down to the current time frame. And to get above that trend line, it would be a significant event in the market.
Yes.
Because that trend line is 28 years going back. So it would change the character of the market. And if you notice, the XAU ratio, more or less, has traded sideways since about 2014. It really hadn't gone up, really hadn't gone down. It's just really a narrow size trading range. And if you look at all the times in the history, this is the narrowest range going back to 1984, where the market was just extremely narrow.
That's amazing, man.
Yeah.
And we were at small numbers in 1984. Just to give you an update, folks, in 1980, the Dow Industrials was only at 803. So.
Wow.
I know. Is that crazy?
Yeah. Sometimes you see that, in wild days, you see that in a day. But anyhow.
Yeah, right. Exactly.
Yeah. So this trading range is going on. So we're probably going to hit some, just after a narrow trend. It's like a Bollinger Band squeezing on a stock.
Yes.
It suggests a big move is coming. Well, the same thing happens with this ratio. I should have put a Bollinger Bands on there. You can see that Bollinger Bands are really narrow going here. So we're going to have expansion of the Bollinger Bands at some point, my opinion, probably this year. And you're going to see a big surge. And you should see a surge through that trend line according to the Weisskopf method. Once you break a trend line, you should see a sign of strength. So I'm thinking that's what's going to happen here. And I actually think we'll probably go back up to, that red horizontal trend line going across there.
Oh, yeah, I see it. Yep.
Yeah, I think, which is pretty much kind of connected to some highs we had back in 2008 and some lows in the 1990s and whatever. Anyhow, that trend line's right around 0.17. I think we possibly get back to there.
And the cool thing is, folks, is that, when you come up to a line like this, like the last time, we failed at that price. But even when you fail, folks, at a trend like that, it's a positive because the market has released information for you, which is so cool. Do you know what I mean? And in this particular case, it's really cool because we're aware that we failed last time, and the bottom line is that, okay, we'll see how this shakes out. And it's a black and white situation, folks, okay, which is so cool, man. That's of course, I want to see us break it because it's nice making money on the upside.
Great.
But if you don't, you don't. And then, we plan out from that particular point. So pretty cool.
Right.
Yeah.
Well, either we break that red trend line coming down from the 1960 or 1996 highs, and I got a blue dotted line there too.
I see that. Yeah.
Which is so you're going to break one or the other.
Right.
And so, but I'm thinking we're done breaking to the downside just because of the way the market's kind of situated. But when I drew this chart, to break that trend line, you need 0.06. We're at 0.057.
Wow.
And we're kind of just sitting there. And so I'm thinking we're probably going to break it at some point, but we haven't broke it yet. And there's another one. If you look at the top window's RSI, next window down is the monthly inflation-deflation ratio, which is also at a trend line. It did break it below the downside, but you didn't see a sign of weakness. just like you kind of broke it and nothing really happened.
Right.
So I think we're going to break that dotted trend line. So I know we're going to another summary here.
Stay right there, folks. Tim and I are coming right back. Dow Industrial's down 445, NASDAQ off 208, S&P's down 56. We're coming right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Talk with our man, Mr. Tim Ord. We are talking markets. So, Tim, let's see. It would be number 6?
Yeah, let's go to 6 real quick.
Okay.
Yep. I don't have a lot of time, but anyhow, this is a buy signal. We got a buy signal back last October. We talked about it on your show, and it didn't really fail. It went up and kind of came back down again. Anyhow, it gave another buy signal. Well, actually, I should explain what this is. This is a weekly inflation-deflation ratio.
Okay.
And when the RSI falls below 30 and turns up, it gives a buy signal. And all those blue lines, the top window is the RSI for that ratio.
Yes.
So, and all the lines across the chart are the times when that ratio, when the RSI fell below 30 and turned back up. Last time that did was, I think, first part of March or something, I think it was end of February, 1st of March. But, it gave a buy signal. Previous time in October, it gave the same buy signal, approximately about the same price. So that buy signal really, first one didn't really fail. It did a double buy signal.
Right.
So anyhow, it's on a buy signal, and that's so let's see where that buy signal is.
Okay.
Let's go to chart 7.
Yes, there we are.
Okay. Yeah, this is a momentum chart. It doesn't really try to pick out the bottoms or tops. It just measures if you're in a rally or a decline. When it's above 0, you're in a rally mode. And this is a 50-day average, so this is like 2.5 months of data. And so it doesn't look at the smaller time frames, kind of looks at the larger time frames. As long as, which is the bottom window, which is the up-down volume with the 50-day average of the up-down volume for GDX. And it's above 0, it's on a buy signal. It's below 0, it's on a sell signal. And right now, you're still above 0, and we're at a trend line. If you look at the top window there, not the top window, the second window down.
I see it, yeah.
There's a neckline, and we're staying at that neckline with a ratio up around plus 10. So I'm thinking we're still got energy to bust through that trend line.
You gotta love it, man. Okay. Well, listen, man, Tim, it's always a pleasure. Until Thursday, you have a great one and a safe one.
All right. Thank you.
Thank you.
Right.
I'll be coming right back with the update, folks. Stay right there.